Thank you so much, Corinna. Today is the 8th of February, and it's winter, and it's really cold outside. But I would like you to imagine for a moment how it would feel like if it was summer. You're walking around the beautiful Palmengarten, the sun is shining, the birds are singing, and there's one little creature that gets your attention. A creature flying around, beautiful, colorful, and the creature I'm talking about is a butterfly. Because to me, personally, the butterfly is one of the most powerful symbols that nature has given us for transformation. And like in nature, we do see transformation also in the economy and in banking. And there are three important elements I would like to talk about. First, when the little caterpillar develops through the process of metamorphosis into this beautiful butterfly, what is needed is that biologically it needs to produce new cells. But the new cells, they're being attacked by the old cells. And only when there are enough new cells, and very importantly, they join forces and they create a network, they can overcome the existing organism. 2, the process of transformation is a very tough and energy-consuming process. If you imagine the little butterfly fighting its way out of the cocoon. And 3, it's a very complex process. And timing is essential. And like in nature, we do observe the process of transformation in the economy and in banking. And with this picture in mind, I welcome you to our session on banking business model transformation. Today, we have invited a vast group of guests, of experts, to talk about banking business model transformation. And you know the format. We have 70 minutes for 7 guests, so it's a bit like speed dating. So without further ado, I'd like to welcome my first guest on stage, which is Jürgen Lademann from Deloitte.
Here, Sarah.
Hi, Jürgen. Jürgen, you're a partner at Deloitte Digital. You have over 20 years of experience in the consulting business with a focus on digital transformation. And for a long time, you've been analyzing the global banking market. So what's your assessment now? How do the traditional banks work, or how are they positioned in contrast to the new banks, the new arrivals?
I think it's a very interesting question, and basically that's really why we started that assessment and assessing the market and looking at the market and seeing how are digital native banks potentially doing differently than traditional banks. So we started actually the process at Deloitte Digital in 2018, where we thought, what is the best way to measure that and have a deeper look into that? So we created something what we call the Digital Banking Maturity Study. Those days it was like a try and error thing, and we started with 10 banks looking at what they are doing, and the most important thing for us was, and maybe that's also the change of the perspective we're going to have in that room now from the morning sessions where we talked a lot about ESG and crypto and finance, digital finance topics, to a customer-centric view. We said, how is the customer feeling and engaging with the bank in digital channels? So we thought, let's do something what never anybody have done before in the industry. We use mystery shoppers to really assess the maturity of the banking digital channels. So we started with 30, I said. Now we reached a point in 2022, actually, that was the latest study, where we looked at more than 300 banks globally, where we looked at more than 40 countries in the world. We're using more than 100 mystery shoppers to do that assessment. We're testing and probing for each of those 400 banks more than 1,200 functionalities in that customer journey, from really searching for information to onboarding, to opening an account, doing day-to-day banking, expand relationship, and close the relationship. So we go through the full customer journey life cycle of a retail customer. So we are in the space of retail banks, in the space of digital front ends, customer engagement. And what are the major learnings out of that? Coming to your question, finally. And I have good news and I have bad news. I
sort of expected that.
Let me start actually with the good news. Because is that how are traditional banks doing compared to digital banks or digital challenger banks? And as we started the study, we had like defined as digital champions. That's always kind of the top 10% of our study, reaching the highest digital maturity score. We only had like challenger bank, neo banks, digital banks owning those positions. Now, if I look to the latest study and see the 300 banks we assessed, it's actually more than 50% of the digital champions are what we would call traditional banks. So they went successfully through that business transformation, becoming, from our point of view, or from a custom point of view, to a digital bank. And only the rest is like kind of the classical neo-banks or digital attackers, how we defined it in the earlier days. So there's a massive transformation going on. So I think that is really the good news. The bad news is, there's always a bad news, that the gap between the best and the rest, as I call it, is becoming bigger and bigger. So some banks really understand what they have to do, become more digital, become more customer-centric, and some other banks are just not getting it, I would say. And we're going to talk about why that is the case, but it's really, for me, it was eye-opening to see that the gap is becoming bigger. We're all moving a little bit in maturity, so we're all getting better, slowly. However, the gap is becoming bigger. And now if we look, one last thing, into the regional distribution, and now the bad news, at least for the Germans here in the room, is coming. Germany is falling behind. So there is no German bank in the top 10% of that study. So no digital champion anymore in Germany. So that's really the bad news. So everybody is thinking we're doing okay with digital banking from a customer perspective. They are wrong. We are doing, at best, average.
But I'd like to ask you one follow-up question on that. When you analyzed all these business models, all these banks, what do you think? Which are the strategies that make the digital champions successful?
Basically, I think there are two strategies which make a digital bank really successful or help the bank to become in that transformation journey to becoming digital. One is, as I said in the beginning, is like putting the customer in the center of their thinking and start digitalizing processes based on the customer expectations. We just see still too much banks which are digitalizing their existing processes and then put them in front of the customers versus re-engineering the process first and then digitize it and put the customer into the center of their thinking. So that results actually in a situation where, and we measured that also in the study, that especially digital champions leveraging all channels to bring new products, to bring new solutions to the customer, and they do it much faster. So that's one strategy. The second strategy is actually to make it easy for the customer. And I have an example for you. I just tried yesterday to upgrade my own account at a German traditional bank from a free account to a premium account. I'm saying I'm willing to pay. I'm really willing to pay. So I opened my mobile app and was searching for that button to upgrade. There is no button to upgrade. So I said, okay, we're assessing multiple channels. We're looking at digital channels like the mobile channel, which is becoming the more dominant channel, by the way. And we're looking at the web channel. So I opened my web account, I logged on, and I was searching for that button. I want to have a premium account. Finally, after scrolling across 20 menus, I found that button. And then kind of an application process started, which was like 30 steps, asking actually how much I earn. I'm a customer of that bank for 20 years now. They know how much I earn. So, and the best, at the end, I said, oh, I made it. So I'm getting like a big celebration. You, hooray, you're upgraded now. No, I got a message telling me, you know, it's busy times. It's gonna take a while till we process it. We're gonna contact you if we made it. I still don't have a premium account. So that's the status. And international banks, or digital champions, let's call it this way, do it with 3 clicks. And that's the big difference.
But if you follow up on that, what do you think? What are the options for the traditional banks to benefit from digital opportunities?
As I said before, I think some traditional banks are pretty good in digitalization, and they are digital champions. So what would be my advice or my strategy for other traditional banks? From my point of view, they have a specific strength, which they're not leveraging currently enough. And if we think about that strength, about like digital expectation from a customer side, this is where the biggest option is. One is, I always typically say, and all research is showing that to us, people love technology, but they need human interaction and personal human interaction. And traditionally, traditional banks have a better proximity to the client. In the field, in the branches, they have the personnel, they have the staff to actually combine digital experience with personal human interaction. And I'm not saying a personal human interaction needs to be in the branch. It could be like a chat, which would my son potentially prefer instead of talking to a real person. But it could be a phone call, it could be a video call, or it could be the branch. This is, I think, one strategy I would recommend traditional banks. The second strategy I would recommend to traditional banks is, if you compare a traditional bank with kind of a challenger or a neobank, there's one big difference. The traditional banks having a ton of customers for multiple years. So in theory, they should have much more information about their customer, their behavior, and much more customer insight than any digital bank can have in the planet in the early years. So if they manage how they leverage that insight and becoming more relevant and really offer and support the client in a more personalized way, that is kind of the second strategy I would recommend to my clients.
Okay, perfect. And of course, I won't let you go before asking you a personal question. What's your personal assessment? How is the German banking market going to look like in 5 years' time? And you only have 1 minute to answer it. 1 minute to answer,
okay. I don't brought my crystal ball. And I have been asked that question the last 5 years, and typically I was very bold about the speed of how things are changing in Europe. Unfortunately, the studies are telling me that the speed is much slower than I expected. So there won't be a disruption. But based on the fact that we're only mediocre in Germany, I think there's a big risk that even more challenges and even more competitors are coming to the market and try and go to that attractive market in Germany and possess that. From a customer expectation, and now I'm speeding up to make the minute, from a customer expectation, I think mobile is going to be the dominant channel going forward. In 5 years, nobody's going to talk about web, it's all going to be mobile. Voice recognition, interaction with the customer is going to be like the dominant channel. And obviously, I think we talked about earlier about payments going to be like absolutely seamlessly. We even don't going to consider banking transaction as something which is happening and disturbing us. So it's going to be even more important to focus on personal finance to make sure the customers stay under control of their financial situation.
Perfect. Very well done for keeping the time. Thank you so much, Jürgen. Your applause. And my next guest, ladies and gentlemen, is someone who's an angel investor, serial entrepreneur, a tech mentor, and has experience for over 15 years as CTO and CEO. In January 2020, he partnered to found Silvr, a neo-lending platform that provides equity-free and easy-to-access capital for digital businesses in France and in Germany. Please welcome on stage Nima Karimi. Nima, great to have you. Can you explain to us, you created a new lending model for new business model. So what's behind your vision?
Yeah, well, thanks for having me here. I'm the co-founder and CEO at Silvr. At Silvr, our mission is to empower the businesses of tomorrow. We are inventing a new lending model we call Neo Lending. And I will give you a lot more details about how it works. But just before, let me give you a bit about my history. As you said, I've been an entrepreneur for the past 15 years. I built several companies, and I started in 2008 in the mobile space and building mobile games when the smartphones just came out. And obviously, I had a lot of ups and downs. But I particularly remember is a call that I received a few years ago. I was running my last company. It was a consulting company, 150 people, was going great. But I had my factor on the phone, so it was my financial provider. And he told me, OK, we changed our risk policy, and we might unplug your company in a week. So as you can imagine, it was very scary because I could lose like everything in 24 hours. But at the end, it went very well. But this story that happened to me, it happened to a lot of entrepreneurs. And I see this a lot in my ecosystem. And the reason it is because it's very hard to build new models based on old formulas. And it's very hard for digital companies to access financing. What are the core issues here? Well, there are three. The first one is that we are now in a fast-paced environment. And in the digital space, you cannot afford to wait for months on committees that just don't understand what new business models are. So this is the first problem. The second problem is that digital businesses, they are asset-light companies, meaning that they don't have stores, they don't have machines, etc., to bring as guarantees to secure loans from banks. And the second point is that all digital businesses are not financed by VCs. Sometimes it's a myth. We think that VCs need to finance the whole digital economy, but the business model of VCs is the power law, and what they finance is the very best of the companies. So the result is that in Europe, let's say, you have tens of thousands of digital businesses that have a great potential for growth, but they just don't have the financing to materialize their potential. But hopefully, this is about to change, and this is changing. This is changing because we are entering into a new era in terms of business financing. The first generation of financiers are banks that have a patrimonial approach, and they finance businesses based on their balance sheet. And it's, I call it financing the past, financing what happened. And then in the 80s, we saw the emergence of asset-based lenders. So, for example, factors that finance invoices, or leasing companies that finance machines, for example. And this is financing what you have just sold or financing what you have just bought. So it's financing the present. But what we see right now is the emergence of a new kind of lenders we call neo-lenders. And these lenders, they rely on the increasing accessibility of data in order to predict the future behavior of companies and finance against this potential future. And this is what we call financing the future. Let's go closer. Let's dig a bit into what is a neo-lender. Well, it's three characteristics. The first one is a user-centric model. The second one is an underwriting that is 100% database. And the third one is an offering that is very flexible and modular. User-centric model, yes, of course. If you want to finance digital businesses, you have to understand how they work. You have to understand these new business models. You have to understand that sometimes it's good to invest in a TikTok campaign because it just generates revenue. And it's about talking the same language as digital businesses. And this language is data. That's why, as a neo-lender, at Silvr, we built a platform that can connect to the software businesses use. For example, if you're an e-commerce company, we will connect to your Google Analytics account, we will connect to your Shopify, to your Stripe, to your ads platform, etc. And this is how we can evaluate your performance. And it's very simple because on your side, it only takes a few seconds. On our side, we can make a financial offer in 24 hours. So it's simple, it's smart, and moreover, it's fair because our decisions are made on true and real-time data. And this is a very important point to understand. And the final characteristic that is also very important is the offering, because loan is not just an amount. It's a complex bundle of an amount, but also conditions, covenants, etc. It's about the way you provide the money. It's about the way you collect the money. And what we did at Silvr is to build a model that can integrate into these new business models in the way that make financing as transparent as possible. This is very important, and what is also very important is to build a model that can serve businesses as they go. We want to build something so at every point of the journey of a business, we can get the business to the next milestone. So by now, you might think that neo-lending is just about financing e-commerce businesses or maybe some software. But when you look at the economy, the whole economy is going into digital. This is what we call the digital intensity of the company. And even the Becher at the corner of your street is starting to use software to collect its payments and to engage to its clients. So it's not about financing only a few digital companies. It's financing the whole economy. And what we see at Silvr is, this growing gap between the economy that is going digital and the traditional financiers. And this is the gap that we are filling with this new model we call neo-lending.
Excellent. Thank you so much. And just before I let you go, you know the game now. 1 minute for the last question. My question would be, you have already accomplished so much today, but nevertheless, you have future plans. So what's your assessment? Where do you stand now compared with your long-term vision?
Well, we started 2 years ago, and we are now the biggest and the most advanced neo-lender in Europe. The biggest because we extended more than 100 million euros in 2 years, and the most advanced because we built a technology that can really integrate into a lot of business models and finance a lot of use cases. And also on the credit side, on the lending side, we are about to create our own debt fund, and we are actually partnering with tier 1 banks in order to continue serving our clients. If I can just share 3 fresh news, we just got our ISO 27001 certification. We partnered with the biggest neobank in Europe, Conto. And finally, I'm very excited to announce that we just opened an office in Berlin and that we started financing German businesses.
Perfect. Thank you so much. Thank you so much for your presentation. So much for your insight. We wish you best of luck. Nima Karimi, CEO and co-founder of Silvr. Thank you. So let's continue. My next guest actually works in the Innovation and Digitalization Department of DZ Bank. He oversees the trend and technology scouting of the German cooperative financial network. And he is building a cross-company innovation team. Please welcome on stage Migendt. Michael, excellent to have you here. Thank you so much for spending the time with us. DZ Bank is a sort of headquarter for a network of around 800 local cooperative banks in Germany. How do you drive innovation across the group? And how does this work across this huge and very individual network of banks?
Yes, DZ Bank is indeed the central bank of the almost 800 cooperative banks in Germany, and these banks are very individual, very independent, and we as a central bank are partnering with them, are supporting them with our own central bank products and with product specialists, which are our subsidiaries. And in the innovation field, we have a very decentral approach. So we have many people working in the innovation field. In our innovation team at DZ Bank, we are only 10 people, but overall there are many people working in that field. And we have several cross-country initiatives to work together on products, to work on innovative solutions. We have our central innovation lab within DZ Bank. We have innovation approaches within our subsidiaries. And for the cooperative banking system, we have team, the Foresight and Innovation team, which is led by the Association of the Cooperative Banks. And we have a newly established Becher, which is a group that is responsible for beyond banking products and innovative approaches in that field.
Okay, thank you. And what are the advantages of such a big network? And hand on your heart, what are the disadvantages?
Advantages are, I think our decentral approach is one of the big advantages. So we have these 800 banks that are in all regions all over Germany, are very close to their customers. You see them in pretty much every corner of Germany on the marketplaces in the real world. And we have digital offerings which are really prominent in the app stores and in the online banking world. So we are really close to the customers. And we use that as an advantage in the innovation field. So we have very customer-oriented innovation approaches. Furthermore, through the decentralized approach, we have specialists in every field that can work very independent and with lots of high degree of freedom in their innovation approaches when building their products and establishing their solutions. Furthermore, we are many people working on innovation, and that's a big advantage. Furthermore, disadvantage, I guess, we are many people, so there are many voices talking in the innovation field. Probably we are not very prominent, we're not well heard, so happy to have a space here to tell you a bit about our innovation approach. Furthermore, I think another disadvantage is that we are not prominent and people do not really come to us at the first point of contact if they're looking for innovation partners. So we're always happy to get impulses and get to know new people.
But now your voice will be heard here at Frankfurt Digital Finance. We do our best to do that. Obviously, there are many big banks out there. But what differentiates you from the competition? What do you do differently?
I think there's several things that differentiate us. First, I'd say the decentral approach. I said we have many people working on innovation. We have the people in the local banks being very innovative. We have people within DZ Bank. We have people in the association that are working on innovation. And they are all working pretty independently, and they have a high degree of freedom, and that makes us different. For our team, what makes us different is that we as an innovation team at DZ Bank, we are not living in the ivory tower. We are working for our partners, we're working with the banks, we're working with our group entities for our departments, and we don't invent stuff. We help other people bring their inventions to life and accelerate them, bring them to the market, and being more innovative themselves.
Excellent. And obviously, you can't do all of this on your own. There are probably areas where you do need partners. So which products, which areas would that be?
I think partnerships are very important for being innovative and are core to our strategy. So we collaborate within the marketplace with our partner banks, the 800 banks, but we collaborate as well with startups, with the innovation ecosystem, and I think that's very important. Probably we cooperate less in the customer front ends, as we are very happy to have our customers facing the local cooperative banks. We are mostly cooperating with back-end processes and along the value chain, but we do all kinds of partnerships. We are always happy to explore things with startups, with non-traditional vendors. We are buying from them, so I think that's what we are open to. And if we partner with startups and companies, if there's a strategic angle to it, we have we participate in equity rounds and own some startups. And in the recent years, we have acquired, together with the partners of the cooperative banking world, we have acquired some startups that are now part of the cooperative banking system.
Before I can let you go, obviously, my final question to you would also be a personal one, and you have 1 minute to answer it. What is your personal innovation goal for the next 3 years?
My personal innovation goal is to be even more open and opening up our innovation approaches to bring valuable customer experiences into the market. We try to work more with partners to explore new opportunities, and it's an invitation for all of you to come talk to us and be more innovative with the cooperative banking world.
You've heard that invitation. Thank you so much, Migendt, for sharing your thoughts with us. Yeah. Migendt, your applause. So, my next guest on stage is Lukas Enzersdorfer-Konrad. He is the Deputy CEO at Bitpanda, which is a leading trade everything investment platform. And he's also the CEO of Bitpanda Technology Solutions, which is the software as a service product for banks, fintechs, and other platforms. Please welcome on stage, Lukas. So, Lukas, you've sort of flown in from Vienna, so welcome to Frankfurt.
Thank you.
And my first question to you would be, what was your vision behind the launch of Bitpanda Technology Solutions?
Sure. So just so everybody is aware of, Bitpanda is in the space of offering crypto services, trading, investing since 2014. And what we do is we are technology enthusiasts by heart. So we're building infrastructure for blockchain and for crypto services since exactly that time. So since 9 years, we were in a space when there were no services there. So we needed to build them, right? And we built up a retail business over this last rather a decade or roughly. Very successfully with more than 4 million users on the retail side, and realized that we are exactly one thing. We can build infrastructure, and this is why we decided to open us up and to bring that infrastructure to banks, fintechs, and other partners in the space who are eager to actually offer crypto to their either retail or also corporate clients. And nowadays, we already enable more than 20 million users in Europe to invest into Bitcoin, Ethereum, and 250 other crypto assets. And I think one of the most well-known here in Germany is N26, with whom we launched a couple of weeks ago, also in Germany, successfully.
Excellent. And obviously, we've seen a few scandals and also a crash, I'd say, in the cryptocurrency space. So, do you still see retail demand in future for cryptocurrencies?
A very, very valid question. The interesting thing is that after the happenings of November last year, FTX, this Bahamas-based crypto exchange, who frauded in the end a lot of customers, but also I think the market, and especially also the traditional financial service industry, would have expected that retail would suddenly draw away from crypto, that investors in general are suddenly very feared and insecure. But what happened is something different, and this is something you can observe in the whole market. Retail investors were suddenly shifting the paradigm for why do I go to a platform, why do I in the end, not bank, but invest via a service provider, from feature and product scope to the topic of trust and also security. Two values which are, I think, the core heart of the traditional financial service industry. So what we can observe actually is very clearly that customers were shifting away from overseas platforms, which, for example, were FTX, but also others from Asia, to European-based ones, to ones that are regulated, licensed, and also super trustworthy and secure here in Europe. And this is actually the topic when it comes to, is there still retail demand? Yes. Is it currently as strong as it was probably 2 or 3 years ago? No, but that's mainly due to our whole financial market sentiment and also the current negative economic outlook in that regards. Yeah.
Okay, and final question. You've already reached a lot since the launch of Bitpanda. So what's your long-term vision? Where would you like to be?
Sure. I think it's not so much about us, it's much more about crypto as an asset class and blockchain as a technology. And if we think about in general, why is that even there and why are people interested in that? There is a myth which I simply want to make super clear. Most of, I would say, especially the traditional financial service industry, would think of people who invest into crypto are people who are young, people who are between 18 and 25, 30 years old. They gamble around a little bit, but I can tell you it's completely different. 60% of the customers we are operating are older than 30 years. They are 30, 40, 50, 60 years old, and they are spending and investing decent amounts of money into that asset class. Why? Because it's for them just a portfolio allocation from a diversification perspective, from an investing perspective. So it's much more about how our society here in Europe is distributed across age, across wealth, and in the end, therefore, also across the appetite for investing. And when we think about how and where will this go, it's much more about that this asset class is here to stay. It's a high-risk, high-yield asset class, but from a diversification perspective, from an interest perspective, it is there and it gives retail users a very easy way to enter, right? You can buy, starting from €1 already Bitcoin, you can buy it 24/7. Trading volumes on the weekend are around about 20% of the total volumes. So you see that there is decent trade activity in times when normal exchanges in the traditional space are closed. And also about that you can transfer the value from A to B, which is not possible with stocks and ETFs, for example. So crypto will stay. The interesting thing is also the demand is still there. And once we get into like a more positive market sentiment again, it also will increase again stronger from an adoption perspective. So we at Bitpanda believe it's now the time to think about how exactly cater that, because people are actually investing into it. And the main question which every bank, every fintech, every neobank needs to answer for itself is, how do I approach that and how do I want to long-term cope with that, with crypto in the end as an asset class? And I think that's the most important topic when it comes down to what are we aiming for. We are in the end enabling partners to actually operate and these services and offer that to their customers in a very easy and secure and trustworthy way.
Excellent. Thank you so much, Lukas. And I have to admit, when you explained the numbers to me about your customer base on the phone before, I was also surprised, so I didn't know that. So thank you so much. Thank you so much for your insight, and good luck.
Thank you very much.
Take care. So we are already approaching our guest number 5. My next guest is actually the head of SME banking at SAP Fioneer. So I guess here in Germany we all do know SAP, but who is SAP Fioneer? Of course he can explain much better than I can, but nevertheless I'm going to give it a try. SAP Fioneer builds software solutions and platforms for banks, insurance companies, and challengers to do what? To run, transform, and grow their business. My next guest, he has over 20 years of experience in the financial services industry. He spent a vast amount of time working for large banks, but also has experience as a founder of a startup company. So please welcome on stage Thomas Becher. Thomas, great to have you. So my first question to you is, obviously I've just explained what SAP Fioneer does. I hope I did that correctly, by the way. And you do work in your role with a lot of banks, insurance companies, challengers, and so on and so forth. So what do you think? What are the challenges in the financial market for the market players today?
I think it's a very good question, a very crucial question. Actually, indeed, as you said, what is SAP Fioneer? I would spend at least 1 or 2 sentences again, because I understood in the good talks beforehand that everyone is very clear about what is SAP, but what is SAP Fioneer, and give you a bit more light on that, and using the chance here. So SAP Fioneer is basically the leading provider of financial software solutions and building platforms, as you rightfully said. It's basically the spin-off from SAP for the financial industry solutions. We combined that in a joint venture with a corporate investor, put money on it, and try to run a better and more flexible, more innovative company than beforehand. And with having said that, we serve more than 600 financial services companies around the globe with our financial services solution already. And by discussing this with customers, what happened from a business model transformation already, I think there are quite interesting insights. I think, first of all, we need to emphasize and need also to consider, if you look back 5 years, 10 years, I think there happened already a lot. So I think financial services companies did already a lot on their way to move and change their business models. But still, apart from the obvious things like interest rates, inflation, but also climate change and so on and so forth, where banks and insurance companies anyway need to react on it, there are very specific things. And I would like to cluster it in 3 of them. I think for banks and insurance companies across Europe, but also globally, it's very important to keep pace with the growing demand when it comes to digital services from customers, when it comes to digital wallets, when it comes to digital payments. I think the first speaker in our session said it already rightfully. It's very challenging to keep pace with the growing expectations. Leveraging artificial intelligence and big data for the benefit of the customer is for sure another challenge, to really do it in the right way, integrated in the business processes, so that customers can really benefit from it. The second I would like to highlight is keeping up with the rising regulation, with the requirements banks and insurance companies face around the globe, but also environmental and sustainable issues, for sure, also topics. And then last but not least, as a technology provider, I think keeping pace with platformification, open core strategies and these kind of things by using quantum computing and so on and so forth in order to really improve security for banks and their customers. These are the 3 challenges we would consider globally, but also in Europe, as main challenges.
Okay, thank you so much, Thomas. And when we prepared our discussion today, we also talked a lot about embedded finance. And as we all know, embedded finance plays a very important role in financial services. But I guess most of you, like I, probably more put it in the retail area. But it does play an increasingly important role also in the corporate sector and also in SMEs. Can you enlighten us a bit on that?
For sure. I think embedded finance as a buzzword is familiar to every one of us. To give a bit more shine on that, we see a massive business opportunity both for banks as well as insurance companies in our industry. Embedded finance can help banks and insurance companies grow their customer base, getting with customers where they are in their daily business, stimulate revenue streams, gather new revenue streams, and so on and so forth. To put a bit highlight on where can it be on the SME side, for instance. If you think about, as a bank, putting your lending product into ecosystems like Alibaba, like Unfinance, like Amazon, like Apple, so on and so forth, and using these data which you can gather from these ecosystems potentially, and for instance, then you can probably build smarter risk modules, risk engines for convenience of customers, so that customers like SME customers can better access to finance like Silvr, for instance, explained. If you look a bit to the corporate side of things, so really the huge corporates, then you can think of in a different way. If you think of that embedded finance can be implemented in software solutions customers typically use to operate their business, think of SAP ERP systems, but also other ones, then you can easily embed finance products easily in such systems. And if you then think one level deeper, this is true, when an anchor corporate customer from a bank buys raw material from suppliers, for instance, then you see immediately that all the ERP systems, to an extent, are connected in networks. And that means you can easily also do some sort of deep tier financing, because you can leverage data not only from your system, but also from your customer systems. And connecting these are new use cases, which not seen at the moment if you only look to the consumer side of things.
Excellent. Thank you so much, Thomas. And obviously, we all know that financial services means complex processes. And we do also know that technology can help to make these processes more efficient. But can you give us some concrete examples of where that can be the case?
Sure. I think technology can help a lot to drive efficiency, reduce complexity, and help basically every company in our industry to be more efficient. I think if we, for instance, think of robotic automation to reduce manual tasks in the back office, but also rule-based stuff and tasks can be reduced immediately to both improve risk or reduce risk and improve the efficiency on the back end side, on the back office side. This helps then also customers, and I think our first speaker said it rightfully, then automatically business processes connected much better than if you do it without technology. If you think about machine learning as a second topic, for instance, then you can think of prediction. How can you predict probabilities of defaults in a better way? And here, machine learning as a technology element can help a lot to really transfer the business in a new dimension. It's not that we have incremental improvements, but rather than really the next big step.
And the last question, you know the game, 1 minute for the final question. With all your experience in the financial sector and all the different business models and clients that you're looking at the moment and that you're working with, what do you think? Which business models are going to be successful in the next decade?
Predicting the future, right? It's not an easy one, but I strongly believe in the triangle. The triangle consists out of having customer centricity and putting the customer really in the middle of everything what you do. Next to it, adoption of technology. I know it sounds very easy, but if you do it right, then these business models will be the successful ones in the future. And last but not least, comply with regulation, adoption of regulation in a very meaningful way. This completes the triangle, and I think these business models will have a very inspiring future if they do it right.
Excellent. Thank you so much, Thomas. Thomas, SAP Fioneer. Thanks for being our guest. And our next guest. Ladies and gentlemen, imagine there's a large international bank like Standard Chartered, and they team up with the leading telecommunications and lifestyle company in Asia, and the leading, or one of the leading, travel agencies in Asia. To do what? To build a disruptor in the banking market of Hong Kong. And who do you think they choose as a strategic technology partner? You've all guessed it. Of course, a company from Germany, headquartered in Stuttgart. So please, welcome on stage Sascha Beck, who's the Managing Director of GFT Technologies. Sascha, when I read about your case, exactly like I presented it, I was, of course, a bit surprised that you're in the game for this Asian new bank. So tell us more about that project, please.
Yeah, I will show you a few slides about the project, a short video. So, and if you have any questions, let's get in contact. Google me, you can check my CV on LinkedIn, and let's get in contact. So, but let's talk about business, banking, business model and transformation, and for sure, technology, because that is what we are doing. GFT is helping companies bring strategy into technology. And everyone talks about technology and digitalization, but to be honest, what happens in our financial service industry in Germany? More or less, digitalization is bringing old processes into digital world. But that's not neo-banking we have done in Hong Kong with the Mox Bank. But what is the difference between classical banking and online banking? Online banking just refers to the ability to get access to your banking partner via website, via mobile banking app. Not more. And all of them, and I did this in my previous jobs as CDO as well, have API layers to integrate third parties, to integrate an insurance company, and docking fintechs onto their old IT ecosystem. This is not neo-banking, because neo-banking, we have limited access, limited usage of IT, of data, of artificial intelligence. And it is so important to have this data, to have a clear and to build a clear neo-bank. You need this variety of tools, investment banking, trading. You need the budgeting tools, the spending analytics, and you just can do this with a modern IT core system, with an IT which is state-of-the-art and not the old IT software COBOL things we have in Germany in many, many large traditional banks. And we have another problem in Germany in the banking market. We have a problem of investment. The IT costs for a normal bank is more or less 60 to 80% of the IT investment is necessary to pay their maintenance. So there is a kind of problem to invest into the future. Sure, online banking, neo-banking will not solve the structural problems, but we can go it step by step and design the future together. Customer journeys always are designed from UI or UX perspective. So you have to put the client in the middle and do the best what you can do to get access to the client, to get in contact, in connection with the client and use their problems. Quickly, responsible, modern, this is attributed by many, many banks in Germany, and we are helping them to get this on the ground and build the future. But no, it was a bit negative. Does that mean that the traditional banks should pack up? No, I don't think. I don't think that Google, Facebook, Amazon, Apple will have the future in financial business. But there's a lot to do, and to build a few prototypes, that's not enough to create the future in our banking sector here in Germany. And Frankfurt is the main town for banking and financial industry in Germany. So in the past, we have always looked on user experience and customer benefits. All processes are focused on maximum UX and UX. This is important, and we should check and optimize this in the future as well. So let's have a look on the IT stack from a neobank. We can start below on the pillar. It's cloud infrastructure. Cloud, because it is not just a hype. You need the speed, the availability of data, of AI, of tools, and the effect of scale. You can use the cloud for this, and then you have the core banking platform with the KYC processes, with the AI things, with the classical risk management. And this is one of our strengths here in Germany. We know how to manage risk and how to manage KYC processes. The core platform is more or less open source. You can connect with third parties, you can connect with fintechs, you can connect with insurance companies, and this is very important to be state of the art. And then there comes the API layer to connect front ends, apps, mobile platforms, together with partners or fintechs or other companies to be state of the art and to adopt the future things much faster than in the past. And you can add chatbots or a sales terminal, or you can build a white label solution very, very easy when you have this IT stack. And the most banks I see in Germany every week don't have this IT stack. It's outdated, it's expensive. You need lots of releases to have this future, so it is necessary to start the way and to get it started. So let me show you a short video where we at GFT have built the future together with Mox Bank in Hong Kong, a Standard Charter company. And by the way, Mox, the name refers to mobile experience, money experience, scalability. So let's have a look at the video.
So Mox Bank is a licensed bank in Hong Kong, backed by Standard Charter, and we partnered with PCCW HKT, launched in September 2020. Our customer base has grown to 350,000 customers. It's increased 70% in the first 6 months of 2022, and it has tripled since we launched Mox Credit Card in May 2021. We need to ensure that our bank remains stable, and it's so crucially important that we remain safe and secure. We pride ourselves on being a trusted bank, and this is an important element. Services, we wanted to be able to provide a product that was simple to use, and it had a number of features that would cater for all types of customer usage requirements. And this is the advantage with AWS, is we're able to leverage a number of their services from monitoring capabilities in CloudFront and continuous monitoring. We add layers of defense into AWS on top of it to provide a safe and secure product going forward. The team at GFT that provides support for not only the bank build but also the run activities have been also instrumental in providing a lot of the expertise around agile methodology, bringing in new techniques for running and how to essentially tune our environment to make it more efficient. Essentially, with our technology stack that we've created, the onboarding process period takes roughly 7 minutes. Our record is about 2 minutes 48, so just a little longer than it takes to cook 2-minute noodles. The coverage of services that AWS provides allows us to provide essentially a very scalable service for our customers, and we're able to ensure that we can remain safe and secure and resilient.
Yeah, this implementation is based on the IT stack I just presented, so everything can happen. Yeah, it is in Hong Kong, but it can always happen and rebuild in Europe as well, because it has the regulation inside and has the capability for the German market as well. And you have heard what the colleagues from the bank has talked, so there's a lot of chances to get in the market. And this was also work in Germany. But it's important to take the first step. So if you need more details, any questions for a deep dive, let's get in contact at a coffee or a drink later. So thank you.
Thank you so much, Sascha. But obviously, before I let you go, you look at business models in Germany, in Europe, worldwide, even in Asia. So what do you think? What are the key components for a successful transformation?
Clarity and management commitment. I would say clarity, you have to know what is the technology stack which exists at the moment and what is the goal, what do you want to achieve, and then get it started. This is the first thing. The second thing is management commitment. You need the commitment from the management, you need the IT department which supports this transformation, and then the culture follows this process. But get it started, be brave, be bold, and then let's go. The future is bright.
Excellent. Thank you so much for your visit. Thank you so much, Sascha Beck, Managing Director of GFT Technologies. Right, ladies and gentlemen, by now we have heard from startup companies, incumbents, and technology providers. And if you do remember the beginning of our session, when I talked about the metamorphosis of a butterfly, you may remember that I said that in order to have a successful transformation, the new cells need to work together, join forces, and build a network to be successful. And with that picture in mind, I'm delighted to introduce you to my final guest, who helps companies to do exactly that. to join forces. He founded a platform that connects startups, corporates, and investors. Please welcome Rodrigo Garcia de la Cruz, CEO and founder of Finnovating. Rodrigo, great to have you here. You have acted as an entrepreneur, investor, influencer, academic professional in the fintech sector for over 10 years. And can you share with us your personal experience of developments, but also failures that you have experienced in that time? Because something must have led you to think, I need to create Finnovating now, which, by the way, ladies and gentlemen, is a kind of LinkedIn that connects and matches business opportunities, for example, between a bank and a fintech company.
So first of all, thank you very much for the invitation. Thank you, Corina. It's an amazing event. So let me tell you what I have done during the last 10 years. And before of these 10 years, I've been working in banking, so I know a little bit how it works. And after that 10 years, trying to convince the banks to collaborate with fintechs. And trying to convince, better? Okay. Trying to convince the fintechs to collaborate with banks. And it was a disaster. Disaster. But it was an inflection point, the pandemic. Before the pandemic, banks used to see the startups, the fintechs, like one side the competitors, big competitors, we know some of them, and the rest like small companies that they are not enough mature to work with. But after the pandemic, a drastic change has happened. Why? Because the banks realized that they need to change the time to market to digitalize all of their products, all of their processes. And the only way to do it is to connect it with external solutions. At that moment, the number of collaborations between fintechs and corporations since the pandemic multiplied by 5. So something is happening. What is the good news? That today, 2 out of 3 fintechs are B2B, are SaaS, and they have embedded finance solutions. So now the startups, the fintechs, the IT solutions are enough mature to collaborate with the banks. And on the other side, the banks create the open innovation teams and create the spaces to connect with these solutions. What are the bad news? The bad news is that there is 50,000 startups, fintechs, insurtechs in the world with more than 500 kind of business models and activities. How we are going to manage this ever-changing ecosystem of innovation? So I started to think, if we are able to connect all of us using a platform like LinkedIn and start to creating relationships, professional relationships, we are not going to create something to accelerate the connections between the innovation and the corporations. And we start to do that. So we map the whole ecosystem, we map the whole activities, and we create a space inviting the companies to connect. After 18 months, we have 12,000 fintechs connecting to the platform from 125 countries, because this is global. We cannot think about just a country, a region, this is global. And on the other side, creating thousands of connections between all of them. So this is the way to create the most efficient way to connect the companies.
Thank you, Rodrigo. And your company is active in over 125 countries worldwide. And you also have a very large presence in the Latin American market. So looking at all your international experience and all what you can see from your companies, what do you think? What are the trends that making companies successful?
So that's a very good question. So probably there are a lot of things, the budget, the culture, but there is a maybe more technical thing that I see that is you're working a lot. After the pandemic, the open innovation teams try to look for disruptive innovation and try to sell to the business units because it's something that is trendy, but the banks that are working well are the business units who are asking solutions to the innovation areas, and they are looking for the solution outside to solve this problem. Because at the end, the digital transformation is about efficiency, it's about user experience, it's about creating new business models or digital business models. It's about that. It's not about disrupting innovation constantly. So this is the good news. The bad news is what is happening if you don't have the budget. If you are a tier 2 or tier 3 bank, that you need to create these open innovation teams. So the idea is to create an open window to go through this, through Finnovating. But the trends are very interesting because when we see what are the most looked for or the most partnership activities, we saw during 2022 that the first one was embedded finance and embedded insurance, followed by lending solutions, starting at the beginning of the year with buy now, pay later, and going through credit scoring, fraud, etc. Also, things about wealth tech and savings and micro savings, and followed by payments and digital payments. But the most important or most interesting thing is what is going to happen this year, 2023. And the first weeks of the year, we are seeing something that we have talked a lot here, that is sustainability solutions to improve the services and to improve the initiatives. But there is another that is appearing a lot, and this is the open AI. Something is changing, and it's going to change very quick. We are seeing a lot of companies doing things with the open innovation, with the open AI. We know all of us ChatGPT, but what you can do with this technology is amazing. We are starting to create some proof of concepts, and something is going to change because this technology is touching by the final customer. So that's amazing. And also, obviously, everything related with embedded finance and with embedded insurance.
Excellent. You've already given the answer to my next question, which would have actually been whether you can give us some examples on where your platform is working very well. But we've already heard that on AI, for example, and embedded finance. But again, I asked all my other guests, and I would like to also ask you a visionary question at the end. Because we do know that the rise of innovation has been supported by very low interest rates in the past. But that situation has now changed, and financing has become more difficult, or in some cases even dried up. So what is your vision now for the future of funding of European fintechs?
Today is a real challenge for the European startups. In fact, in our platform, we can see that 20% of the European fintechs are open to capital. And most of them, they are not finding active investors because the investors are waiting for changes in the macroeconomic situation. So, on one way, if you are B2C and you don't have money in your pocket, you have a problem. If you are B2B, companies are starting to become profitable, is the only way. And on the other side, there is a huge opportunity for investors, the European investors, to use all the B2B solutions from Europe to invest and to grow with them.
Excellent. Thank you so much, Rodrigo, for your appearance on stage today.
Yeah.
Ladies and gentlemen, with our final question, we obviously tried to build a bridge ready to the next session, which deals with the future of funding for European fintechs. So I recommend that you all stay tuned. But to round up our session, I would like you to remember the beginning of our session. Do you remember that little butterfly that you saw flying around in Palmengarten? And did you know that there are over 180,000 different species of butterflies worldwide? And don't you agree that also in banking, we have a vast amount of business models, entrepreneurs, and visions? And I hope that they can, like our little butterfly, successfully spread their wings and fly. So with that, I'd like to welcome on stage again, thank all my panelists. Please welcome me on stage again for a final farewell picture. Jürgen Lademann, Nima Karimi, Migendt, Lukas Enzersdorfer-Konrad, Thomas Becher, Sascha Beck, and Rodrigo Garcia.